These numbers are wild.
Right? We were able to get this one for 270. It's a little higher than what I wanted to. I wanted to try for the 250, but I saw the potential in it. By the time we're finished, we'll have put in about 120,000 into it. Brand new house, right down to the studs kind of thing. By the time this is done, I should be able to turn around and sell this for about 550. And it's going to cash flow really nicely for somebody.
A true value add opportunity here, right? Like
100%.
Welcome to the Canadian Real Estate Channel. My name is Rob Chopra, and I am going to be your host today for the Windsor Market Update with Rhys Trenhaile. A little bit of background about me. I am a real estate investor out of predominantly the Niagara region, focusing on multifamily investments, and as a mortgage agent with the Finlay Mortgage Team, helping homeowners and investors alike scale through the residential into multifamily financing in a multifamily portfolio. So, Rhys, welcome to the show. It's an absolute honor and pleasure to me, and I'm really excited for today's episode.
Yeah, same here, Rob. Let's get it done.
So, Rhys, to get started, why don't you give us an update on what's going on in Windsor today, the opportunities that you might be seeing, what investors should be looking at? How about a little bit of a market update in terms of the Windsor market?
Yeah, we can certainly start with that. So, Rob, I'm running a team, the Vanguard team, 7 real estate agents down in Windsor, Ontario, that all focus on specific niches within real estate investment. One of my teammates has been gracious enough to put this together for us. I'm going to start with residential sales, which is a very simple, straightforward measurement. And what you'll find is, so we go month by month. You can see my mouse.
Yeah.
So month by month, the purple is last year. And for those new to these updates, I call January, February, March last year, I called that the stupids, when property values in Windsor went up 36% in 90 days. That's just insanity, right? And you can see consequently there was an adjustment back downwards, which you would expect, right? And that continued till December, right? And what you'll find is that the sales declined quite heavily. This was the beginning of the end of the sort of good times with the sales in a temporary sense. I remember about a 100-day period, and Stephanie Saunders, my teammate, who's going to join us later to talk about BRRRR strategy and additional dwelling units. So stay tuned, guys. It's getting really good. We had next to no sales for 100 days from about the middle of July through the end of the year. Well, it picked up again in like November. But oh my gosh, I tell you, from a business standpoint, I had less business then than I did during the global meltdown. Because during the global meltdown, there's power of sales and there's deals, and some people have money still, and right. I mean, it was nuts. So anyway, what you're seeing here is, when you look at the purple, is you're seeing a trend that you're going to see these sales go right down. But then as you get into January of 2023, which is this yellow line, you can see how things start picking back up, right? The difference here in July between the purple line in 2022 and the yellow line in 2023 is that you're not going to see a continued drop here. You're going to see this number here continue and probably even go up a little bit again. You'll see a nice little bump in September, October, and then everybody gets into Christmas mode. So right now everybody's on vacation. So August, and getting ready for school. They don't want to move their kids right before school starts. So you don't see as much in August. It's a seasonal lull. And then it picks back up in September, October, and then you'll see it drop off again in November, December, January. And a lot of you guys that are seasoned investors know this. A lot of the best deals are when the Christmas lights are up.
Mm-hmm.
A lot of the best deals are when there's 2 feet of snow on the ground. Right? It separates the wheat from the chaff. Not everybody who's serious is going to travel 400 kilometers to Windsor from the GTA to buy. when there's 2 feet of snow. You're just not going to. But the first deal I ever got as an investor, and I had a guy, Mike Mooney, who's now retired. He was a student rental specialist, real estate agent. And the first deal I ever got, I got it because it was my third purchase. I got it because there was an ice storm. And we were the only 2 clowns stupid enough to go out in that ice storm to go see this new listing. And we did an offer that day because the ice was not staying on the ground forever. And I remember his Lincoln Town Car, we're going down like a slight drop, and he can't stop the car, so he's running the car's tire against the curb to make sure it keeps low. Yeah. Oh, it was bad, but we got the sale.
That's hilarious. And I think that's it's a really good point, because I think it ties into the fact about the best deals are the ones that are also created, right? I mean, this is a sense of creation where in a slower time, going out and actually looking at opportunity, right? And this winter, like you trudging through that snow to get to, where you're going. That's funny, because I think the Lincoln Town Cars also have real drive, right?
Yeah, and it's also a real cliche. I mean, a real estate agent having a Lincoln Town Car. I've never seen that. Right, Rob? Yeah.
Yeah.
Never. Yeah, we were a cliche that day. Okay, so guys, this slide here is the average price in Windsor. What you'll notice here is, okay, so the straight line is 2022, and the bars are 2023, the yellow bars. So again, January, February, March, we got the stupids, and then look what the price has done, right? And that kept going. This kept going down to about here. Got down to about 476, about here. So you can see it was almost a straight line downwards, right? About 476. And then it stopped. And then it started climbing back up again, 476, 516, 552, 532, 568, etc. And what you find now is, yes, there has been a little bit of a drop, but I'll explain why in a second. And I did last month as well when we did this. It's not what you think. If you look at the average houses, that sort of that middle range of 400 to 700,000, they've continued to go up in price. Why you're seeing a price drop here is $800,000 homes and higher have plummeted in number of sales. So it's skewing this number downwards, right? The reality is, if you take out the most expensive homes, this line is continuing to do what it's doing, which is this steady climb back up. So really, guys, I would say, if you adjust for those more expensive homes that are now not selling, like for example, we have 2 high-end listings over $2 million right now. There are 45 listings of $2 million. Only 5 of them have sold in the last 6 months. So now there's this glut of, 2 million plus valued homes not selling. So that's why you're seeing this number go down. It's a bit of a red herring.
Mm-hmm.
The reality is, for the types of houses that we're looking at, guys, this number is still going up. All right. And you won't have a correction like you did last time. There's too much going on economically in Windsor. We're just entering our second golden age. And I'm going to get to some new stuff right now, and I'll show you what I mean by that and how it relates to safety of investment, which is a really key thing. Market activity from last year, we're down 18%. Again, because of the crazy times last year, again, with the stupids at the beginning of the year especially, like that's why you see a lot of more market activity than you have this year. This to me is a much healthier line, the yellow line. It's much healthier, much healthier. I'm very happy to see it come back down to normalcy. But we still have a huge problem, Rob. We still have, as I said, this massive economic golden age upon us, and we don't have the housing. Like, it's a problem right across the Western world, which people don't realize. All the wealthy nations all have home shortages, all of them. So it's not just a Windsor problem or Ontario problem or Canada problem. It's literally the entire Western world is having a problem with this. And so we're not alone, but we're going to get hit harder down here, which again is good news for the investor. But we're going to get hit harder down here because of the fact that you're an area of about 330,000 people, and you're adding about 1,000 people a month.
Yeah.
Like,
It's
it's a fraction. Like, it's,
yeah, and I mean, this is something that's continuing to go on, right? A couple of really key points that I wanted to touch on from some of your past slides really quickly, Rhys, is that volatility in the market, especially in the higher end homes. And I'm seeing this with my own clients as well, where, the entry level housing in let's say the Windsor market here, the entry level housing is something that continues to just make that incline. Again, like, people are going to pay what the entry level is to get into these homes. So the volatility is a lot less on these types of assets. Whereas at the higher level, and appreciate you pointing out here the skew in the line here, because that 800,000 plus, these just simply don't move a lot. Not to mention as investors too, like, do we want to buy at that height? What's the margin for us as investors when we go back to, let's say, if we're going to do a renovation on or refinance the capital out of this property, how much really is left? So I think that's a really good point that you point out there about the volatility based on the higher pricing versus the lower pricing. And as we've seen the interest rates too, it's important to note that essentially as the interest rates increase, people just qualify for less on those higher prices. They're going to qualify for less anyway based on ratios. But my point there is that that's why you see these sitting for a lot longer.
Sure. The average home price right now would be roughly $600,000, which means, as a rule, luxury homes start 3 times as high, 1.8 million. Those are not selling. There's no luxury home selling, and that's skewing the numbers downwards. I always love this slide because when I started doing these, and that wasn't that long ago on the Canadian real estate channel, this number was way bigger. It was way more than 20 sales, man. Like, the bulk of the sales were down here. Now look where the bulk of the sales are going, right? So right now, this is your sweet spot. Stephanie just sold a duplex that has the capacity for a third additional dwelling unit. Let me correct that. It's a house with an additional dwelling unit where you can add an additional dwelling unit. So she just sold one of those for about just over 500,000, right? But anytime we can do deals in this range for you guys, unless it's a bigger multi-family property, right? And then you're getting up over 600, 700, 800,000.
I have a question in regards to the industry. Like, what's the biggest industry that's driving in Windsor, bringing people there and for investors, like, what can they really depend on when it comes to that industry? And immigration, I understand.
Yeah.
What is that biggest industry that's driving the market?
Really quickly, in a nutshell, people need to understand that when I started in real estate sales 20 years ago, Windsor is the center in the world for tool, die, and mold making in parts, right? And so that used to be just for the big 3. And now it's diversified all over the place. And now we're the largest hub of software for automation in Ontario, not Waterloo. The big battery plants and all the supporting plants that come out of that. Logistics has gone from nothing to everything. Amazon's about to open a 120,000 square foot facility. Science, tech, research, and development. We really didn't have it 20 years ago. Now there's all these R&D facilities, and they're adding a 100,000 square foot R&D facility full of 650 engineers and PhDs, and is one of the 2 world-class battery research and development facilities. Guys, I could go on forever, but I can't because we're short on time. But our economy is not just about making cars. It's way more. All those tool, die, and mold shops now, they make stuff for every industry. Like, you should see the medical components that they make that nobody else in the world can make. And they do them subcontracted to places like Boston Medical, right? So,
as an investor, the first thing that goes to my head is the amount of multiple strategies that can be done within the market. That's, this is a market where you can go and implement, multiple strategies, which Rhys, your team will definitely be able to help with that for whatever the desire is for the investor specifically. That's so great to hear.
Yeah, and Peter, if you can pull the slides back up really quickly, I'm just going to quickly show 3 quick headlines. I'm not going to take more than 2 minutes with this because we really need to get Stephanie in. Area home prices continue strong rebound. That date is erroneous, but the rebound has been 53.3% so far this year, right? And it's not stopping. It's supply and demand. We don't have enough housing for rent. We don't have enough housing for sale. This is why what Stephanie does is so important because every time you add an additional dwelling unit, you are doubling density, number one, and you're creating badly needed rental units, guys. It's a huge pain point in society. And if you're addressing a pain point, not only are you making a lot of profits, you're drastically plummeting your risk of investment. Because if society needs something and you're addressing a pain point, that's where the money always is. Don't ever forget that.
Agreed.
Second headline, Windsor will be an exception to Canada's economic downturn, Conference Board of Canada. So our economy grew almost 5% last year, and they expect that to continue at a clip of about 2.5% a year, while the rest of Canada is expected to go down to pretty close to 0 to 0.5. So they're basically saying, like, you're not going to stop this train in Windsor. And that's a bunch of economists at the Conference Board of Canada saying that. So those are the brainiacs that are supposed to know this stuff. Really quickly, apartment supply at a record low while rents continue to new heights. So the rents are still going up at about 0.75 to 1% a year. A month. So they're going up about 10% a year. And they can afford to because we're still one of the most affordable cities in Canada to live. So as a percentage of your income, we were the lowest. I think we're second lowest now for rent and for home ownership. All right. And again, the date's erroneous on here. I just wanted to show the headline to show that we're down to about a 1% vacancy rate, which is essentially an effective net vacancy rate of 0.
Mm-hmm.
Whew. Now we can introduce Stephanie.
That's awesome. I appreciate you sharing all that, Rhys. Like, you got my mind going in a lot of different ways in regards to the Windsor market, and for anybody that's on here, especially if you're looking for that target market, this might be a great opportunity for you to get started.
All right. And in true top real estate agent fashion, we have to get Stephanie in here because she's got to get to a home inspection. There she is, like magic.
Hey, Stephanie.
She's probably going in the background going, "Shut up, Rhys."
I'm kind of used to it.
Yeah, I know. Well, thanks. Yeah. So Stephanie's been with the Vanguard team for 5 years.
Yeah, I think I joined in 2017 when I was first getting my license, and yeah.
Yeah, and you've got to recognize a firebrand when you see one. Stephanie is not for dreamers. Well, she'll take your dreams and get you there, but if you keep dreaming and you don't have a foot in reality, she'll call you out on it, and that's a good thing, right? So if you want to get wealthy the fastest way possible, and you're starting at like a middle-class income, you've saved up probably, Steph, about 140.
150 is like a secure number for you.
Yeah, to do ADU, right? And that can be a homeowner's line of credit and stuff, but guys, remember, that's also expensive. So if you're going to do that, you got to have a game plan to move through the burr quickly and refinance at a lower interest rate and have that cash flow. Stephanie, why don't we go right to the case study because you're short on time.
Yeah, for sure.
Yeah. All right.
So, Rhys, you definitely touched on a couple points where it was the type of properties that are going to be the best ones for doing this for you are going to be those ones that are kind of undesirable or like the diamonds in the rough, right? Those are going to be where you're going to have the most wiggle room to it. So I really like finding the properties that everybody else is afraid of.
It's like the nerdy girl at the dance in the Hollywood movie, and then she's in school, and then she shows up at the dance, and she's an absolute smoke show, right? That's what Stephanie does.
Yeah, a lot of the properties that I go for, they're ones that most buyers will walk in and get the hell out of there kind of thing because they're terrifying, right? This one was one of those. So it had sat on the market for quite some time. It was basically a rooming house that was shut down by the city and then had a squatter in it for a long time. It was in terrible, terrible condition on it, but I saw it and I'm like, you know what? I think that we could work with this. The house itself is really good. It holds a lot of potential to it. So I think we can work with this. This one here, it's on the West End, so it would work really well for like student housing, or if you wanted to do like an ADU in the basement, the ceiling heights are high enough. It does give you lots of room to be able to do that in there. So we were able to get this one for $270. It's a little higher than what I wanted to. I wanted to try for the $250, but I saw the potential in it. So This one here, we basically have, by the time we're finished, we'll have put in about 120,000 into it. This one was very extensive, probably one of our most extensive ones that I've done. So like new windows, basically gutted it inside and rebuilt it. Basement was unfinished. We waterproofed, new furnace, AC, everything like that in it. It is a brand new house, right down to the studs kind of thing. By the time this is done, I should be able to turn around and sell this for about $550, and it's going to cash flow really nicely for somebody. So in the West End, you're going to get a lot of students that are going to be interested in it. Rooms for students are renting out for anywhere from about 600 to about 800. We were able to get this one, and that's in 7 utilities. So that means that this house here, once it's all finished, it's going to have 7 bedrooms that are going to be finished. This one here, I put an average of about $700 per room. They're decent size for 120,000. So that's going to be $4,900, including one of our most expensive ones that I've done rent for it. So like new windows, basically, I mean, it's definitely going to make somebody a lot of money with it. Whether they're looking at a property like this for a strategy, it is a brand new house, putting in the sweat equity, putting in the time and the money to make it done. I should be able to turn around and sell this, turning around and refinancing it to pull that money out. It's going to cash flow really nice for somebody.
A true value add opportunity here, right? Like,
100%.
and that renovation cost. I have a question for you guys, specifically for investors. Can you help investors when it comes to contractors in the area? That's amazing.
Literally anything that could possibly come up. I've probably got somebody for it, and if I don't, somebody on the team does. Like I have clients that contact me 3 years after I got them a property. Hey, Steph, this came up. Who do I call? And I'm like, yep, here, call. Here's 3 options for you. Give them a call.
I bet you we spend 2 days a year just answering that. Right? Who do you have? Who do you have? Who do you have? I just referred one of our property managers right before the call, right? Like, yeah, we have power teams, and you're not using anybody we don't use ourselves to generate our own wealth, right? There's 2 people on the team now that are already independently wealthy, and people like Stephanie are already on their way to independent wealth through passive income. So we practice what we preach, right? I do want to say with this property, this is a great example of one that most of you would have said no to.
Mm-hmm.
And I know that from experience, right? So a lot of times when Stephanie's doing these, I don't want you guys there on the video going, well, you know, those real estate agents, they take all the best ones and they give us everything else. No, these were introduced to our investors. The building I'm in right now, this is a 3-story commercial building. I bought it back in the day 7 years ago, and it was a burst strategy. And we tried everything to get an investor to buy it. We could see that there was an insane cap rate waiting at the end. Like it just, we couldn't get anybody to buy it. So then we bought it.
Every single one of my properties that I have personally done, I have taken to probably no less than 10 of my clients and said, guys, look at this property. It's amazing. You have to go for it. And once I've exhausted all of my client list, then I will go for that property. I do not cherry pick. I make sure that my clients always get them the first choice on them.
But look at what people are saying no to on the numbers.
Any of these numbers, and my lenders would love.
It does drive you nuts. Like you can lead a horse to water, you can't make it drink.
Oh,
right?
You just want to shake
just
people.
A lot
You're
of
like,
people
I want to make you money.
It is the most frustrating thing about. It's like I remember watching a kid who got hypnotized in high school, and the hypnotist convinced the kid that everybody. So we all had to pretend we were licking ice creams, and he told the kid that only he knows that licking ice creams cause cancer. And I look back and I go, man, that was super mean because this kid was freaking out. But I feel like that kid. I'm just like, why aren't you taking this in? Like, why don't you believe me? Like, you buy this place, right? It's just, when you want to see people do well and make money and enjoy that same sort of path to independent wealth that you're on personally and Stephanie's on. And it's like, just do what we do, man. Just like we're Gandalf. It's like you're Frodo and you're telling Gandalf, yeah, man, I don't think you know the Shire like I do. Like, what? He's Gandalf.
For all the Lord of the Rings people out there, right?
Oh, I just nerded out, right? Yeah. I mean, I'm trying to explain our feelings on it when our clients don't take these places.
Steph, this comes from like a client experience opportunity as well, right? Like the fact of the matter is when you're showing this to your prospective clients, if nobody buys it, you're going to buy it anyway.
Mhm.
And I think that's something too when it comes to building trust. Like with my realtor that I work with, it's the same thing, right? In my market where it's like, I know they're going to buy it. If you told me, if you don't buy this, I'm going to buy this and I'll show you that I'm going to buy this, right there, I'm going to buy this.
Right, exactly.
These numbers are wild.
Right.
Yeah, they're not always that high, but I mean, you're walking away with a cyclic BRRRR strategy on whatever Stephanie's introducing you to.
And now these are not going to be just your run-of-the-mill, find them on MLS listings, right? No. This one was on MLS, but it sat for a while, right? So it's not going to be the first one that's going to pop up in your email inbox when you open it up in the morning, kind of thing. So I mean, these ones here you actually have to like dig for. And that's why having somebody who does it themselves is really important for investors that are wanting to do this as well, because I can look at a property and I see it from a different perspective than just your average realtor that is just looking to make a sale, right? I'm looking at this from you can put a kitchen right over here. You can do a bedroom here. There's your main stack. You're going to put the bathroom here, right? I'm looking at it from an actual renovation perspective. And somebody who myself, I'm going to be making those type of profits off of it as well. My clients, most of them, they are repeat buyers on it. They have purchased 5+ properties from me. Yeah. And it's because I want them to have a good property that they're going to be happy with. I have that vested interest in making sure that they are happy with that property, because if it makes them money, they're going to come back and buy the next one from me. So
100%.
Yeah.
It's the same thing in financing where it's, having that strategy session with your client to figure out what the direction is that they want to go and what their goals are. And the minute, just like you guys from an advisory perspective, I look at myself as a capital advisor, right? If we don't start off strategically in the proper capital right from the beginning, that 5-year goal just isn't going to exist. And it's really important to position right from day one. And I think that's a really great point because, understanding exactly what your investor is looking for as well will help with that scalability over time, which continues on for repeat business as well. And wealth creation, to your point, Rhys, for both your investor and yourselves.
Absolutely. Yeah, we practice what we preach and vice versa, right? So, and I mean, look, in fairness to an investor that hasn't worked with us before, it's probably a good thing that you've got a healthy dose of distrust. If you've been around the block, you've probably been burned once or twice like me. But yeah, at the same time, it's really hard to get wealthy if you don't find a team that you can trust to move you forward into wealth. I mean, you don't have to be a rocket scientist as the investor. You got to surround yourself with the best people possible.
And focus on what you're good at and let others focus on what they're good at.
Yeah, exactly.
Yeah.
Steph, this is an amazing deal. This is wild.
Yeah, this is
I love this.
Our best one that we've had so far, but we've done 8 of them now, and each one is really good. Usually a nice profit of about 60,000 is kind of like a average for us.
I was going to say, you tend to flirt with that sort of 75 grand range.
Right.
Oh, you're talking after sale expenses.
Yeah, exactly. Right. This one here is definitely going to be our biggest one. But what I've done with a lot of my properties that I've renovated is I've actually paired them up with some of my clients with it too. And a lot of my clients ask, well, why don't you BRRRR these? Why don't you refinance them and hold on to them? And my answer to that is, I've been looking for properties with my clients, ones that had the flips done to them, and they were done very, very poorly. And yes, they had new flooring, but it doesn't mean that it was done properly. And I wouldn't be happy with my clients purchasing these properties. So there was a lack of good quality renovated properties that were available on the market.
It's true.
So I saw it as, I'm going to purchase these properties. Every single detail that goes into these properties that we renovate has my clients in mind. Would I be happy with my client having this particular item in here or having this setup? Or are they going to come back to me in a year if we do this shoddy work, right? I want them to know this is good quality work so they get a good quality house.
I'm going to step in here and say, and I mean this endearingly, Stephanie is our team perfectionist.
Yeah.
Yeah.
I love that.
When I get something wrong, she calls me out. It's hilarious. And it's just like, yeah, that's wrong. Yeah, I'll fix that. Yeah.
I want to point something out about this deal as well, specifically, because there's two different types of investors, and you touched on this, right? People that walked into this property don't want to do this. They turn around and they walk right out.
Right.
Whereas, Stephanie, where you say you acquire this property with your client in mind at the very end,
Mm-hmm.
This might be a little bit long-winded, but I want to talk about something here. When you look at your purchase price and your renovation cost and the capital required,
Mm-hmm.
along with the time. So assumption based at 270 with 20% down, you're about $54,000 plus your 120,
Right.
plus your closing costs, your carrying costs for the duration of the renovation. And that's hoping that you have the right team around you. Like, of course you have to, but my point is if this is a new investor, especially, those carrying costs can expand.
Mm-hmm.
Oh, yeah.
Whereas if you look at it from a $550,000 standpoint, being able to buy a turnkey investment, essentially to get your feet wet and get into the market,
Mm-hmm.
20% down on that 550 is 110, and buying it from your team that's actually created that for you, somebody you're always going to have contact with, this is a no-brainer entry-level opportunity to get in. And I mentioned the difference in the capital, right? 54,000 plus 120. Let's call it 175 to put the whole thing together. For 110,000 plus closing costs, you're able to get into this. Rhys, you touched on the home equity lines of credits being costly. Keep in mind that we also need to service that debt in an application when you're acquiring this, if you're using 100% of the home equity line of credit. So what if the difference, and you could qualify for the property based on 110 at 550 versus 175, and now you have a cash flowing asset right from day one. This is an incredible strategy that you guys are using.
Thank you. Yeah, no, we've been having a lot of success with the clients on this stuff. I used to do these all the time myself, and it's gotten me where it's gotten me, where I'm doing the bigger projects now. Right. That being said, my wife wants to start investing, and we're going to tie her in with Stephanie, and she's going to do the house plus ADU stuff as well. And I guess 2 points to that. There are more opportunities for house plus ADU BRRRR strategy in Windsor than there are people doing them.
Yes.
Number one, right? And then number two, student rental properties. I wasn't a big fan of them for quite a few years. I thought they were overvalued and inflated. But I'm starting to really like them again because the rents have gone way up, and Stephanie's utilizing, I think, that kind of approach here. I think did you have students in mind when you did your cash?
100%. So when we first purchased this one, we actually had the house plus ADU in the back of our minds with it because the basement was perfectly set up for it.
Yeah.
But being the location and everything with it, we had actually kind of thought about, it's going to most likely be a student housing when it turns around and sells, because that's where its highest profit is going to be, cash flow. So we had actually on this one added an additional bedroom instead of a second kitchen down in the basement. But we did rough in for a kitchen down there so that if somebody is wanting to purchase it in the future, and by the way, it's going to be available in about a month. So if they were wanting to purchase it in the future and wanted to do the house plus ADU, then all they'd have to do is just take that one bedroom, open up a little bit of the drywall and put a kitchen in there, and it's good to go.
Yeah.
Made sure that it's got full egress windows in the basement, everything, so that it will have absolutely no problem being totally able to do that ADU down there.
So Stephanie might have confused a couple of people right at the end. She chose not to do 2 units in this one simply because it was more profitable just to keep it for 7 university students, because it's so crazy around the university right now. And you have kids that are in 4-bedroom houses, not 7-bedroom houses. They're in 4-bedroom houses and they're 8 or 9 deep. Like there's not enough housing. Like that's what we're dealing with right now. I just want to say too, with student rentals, guys, remember as an investor, students move on about every 2 or 3 years. right? So you rent to a group. You don't rent room by room. You want
You
the
can do both though too. Sometimes you rent it out by the room. Sometimes you rent it out by the group.
I'm just saying you don't want to rent it out by the room unless you want a whole lot of headaches. Like if you just want it to be fairly calm. I mean, we're trying to sell passive investments, right?
Property managers work great for student housing too.
Yes, they do. Absolutely. But they don't want to do room by room. They pull their hair out.
From a financing perspective, I'd love to see one lease agreement as well.
Yeah, for sure.
Yeah, there you go. Yeah.
There's options. That's not what I'm saying.
The problem is too is once you add door locks to each bedroom, the city now is going to argue that you have a rooming house.
Mm-hmm.
Well, those students are all going to want separate door locks, right? Because they don't know each other. Somebody's going to steal my laptop, sort of thing, right? It's a mess. You rent out the house by itself, or you create you do the 4-bedroom and the 3-bedroom units, and you rent those out. The one thing I want to say about student rentals, and then we can wrap it up, is the tenants turn over every 2 or 3 years, which means you can reset the rents higher because our rents are going up and up and up, right? So you almost don't want the tenant that's going to be there for 10 years. As stable and nice as it is, it's nice to realize upon the higher rents as they keep going up every 2 to 3 years. And students create that for you because they're just not staying in the house 7 deep. Even if they stay in Windsor, they're moving into an apartment once they have a job, right?
I love it. Well, Rhys and Stephanie, I really appreciate you guys sharing the update. Although we went on a bunch of tangents, I think there was a tremendous amount of great conversation here, especially for people that are unfamiliar with the Windsor market. And this is what these episodes are all about, right? It's about getting in deep with people that are in the area, understanding exactly how the market works, what the tendency, what the nuances are, what the opportunities are. And, today's episode was unbelievable. That house, you've got my attention. Not only that, I think just in terms of the market as well, the fundamentals are strong. The industry is strong. I really appreciate you guys taking the time today to jump on here. And I had a lot of fun with this too. So Rhys, Stephanie, what's the best way for people to get a hold of you off of obviously the Canadian Real Estate Channel?
If Peter could put up the final title card, that's our contact information there. There you go. So
okay,
there's
awesome.
the answer, Rob. Yeah. So Stephanie's email would simply be stephanie@thevangardteam.com. But if you send it to the general,
there it is.
Or you can look at that.
Can you see it there? Okay. There. Let's see. Can you read that? Okay.
Awesome. Take a picture.
Well, they'll pause it, right? They'll pause the YouTube video.
Is it clear? There we go.
Yeah, you're good.
That's good.
Okay.
All right.
Good.
If anybody that's looking to get a hold of me from the financing side of things, I'd be more than happy to help you. As I mentioned, I am with the Finlay Mortgage team. You can reach me on Instagram at rob.chopra, or alternatively, look me up on the Finlay page. I'm super easy to get a hold of, and I'd love to connect with anybody. So again, Rhys, Stephanie, thank you so much. This was a awesome opportunity, and I look forward to doing this again really soon.
Awesome. Thank you so much.
See you guys.
Thanks for tuning in, everybody.